question. Overall, we had this discussion. The housing market's been, on a hot streak. Since you're involved in that market, what are your thoughts on the current housing market? Prices are at all-time highs. A lot of statistics out there showing, there's more real estate agents than available houses in the U.S. And like we've due to COVID and all the money spending and the low interest rates, as an economy, we're seeing that houses are becoming a luxury item. A lot of people, houses are becoming way overpriced, and the capacity and the supply of houses has gone down dramatically. So over the next couple of years, where do you see the housing market headed to? Um, some economists are saying like the housing market's still going to be strong. And then the other side is, like the housing market's in a bubble. And there's fears that over the next couple of years, if the economy suffers, people are not going to be able to pay for their houses, and that can have a domino effect on the real estate market. So what are your thoughts, Michael, since you're involved in that industry?
So I think that the current market value that people are putting on their real estate properties, I think that there is some truth to low inventory, and thus people are willing to pay higher prices. That is not a sustainable market by any means. Given the fact of the example I gave in terms of the Tesla and the investment, I think people are investing in real estate, and that's been a traditional, tried and true method of wealth to, from somebody who doesn't speak any English to, an executive on Wall Street. Wealth is in property. I think Warren Buffett is an example of a real estate mogul that they've used a lot of their real estate to empower themselves and also enrich the environments or societies or cultures and communities that they promote these developments in. I think given the fact that people are willing to pay 30% or $30,000 over asking is ridiculous. There is a shortage of homes being built, but if we go back to my example of 2009 and 2008, the housing crash, people were lending money like it was, water flowing from a faucet. And we all know that that ended in a great disaster that, no credit, no needed, just have a job or, something of that nature, and we'll lend you $200,000 for your house. And then we saw that the detriment that had on our society is that people were getting money with little to no credit, investing money in houses. Sure, that really helped the economy grow in terms of jobs and everything, but then that bubble really came to a really abrupt end when people had to pay that money back. That was first off undoable by majority of these people that were somebody that works at, I'm going to use, a burger joint, making at that time $9 maybe an hour. They were approved for a $300,000 mortgage. Like, how do you foresee you paying that back? It's impossible on that salary. Even if you work 24 hours a day, 7 days a week, slept there, you just can't do it, but you're still approved. So given the fact that people are willing to pay these prices over sticker, I've spoken to a number of agents. This is the biggest push in real estate market that's ever seen in history. People are paying these numbers. And the really strange portion to that question is that how are people coming to the table with cash? Cash is king. That's always been the rule. That's always been the mindset. If you have cash, you pay cash, you can get a great deal. And it's true, right? Because the person is in instant money. That's what it is. It's just done. So, and again, when I speak to these real estate agents about our services, they're really reluctant because of how they say the market is on fire. It's blazing. That we set the price of a house that is relatively within the margins of the comps in the area. And then since it is such a low inventory, that people are coming for an example, $100,000 house. They're willing to pay $180,000 for a house that is only valued at 100, maybe 90,000. And they're willing to come with cash because there's been 45 offers. There's lineups outside the door just to go visit the house. So again, real estate agents are posting these things on YouTube, on TikTok, on social media content that, hey, I'm going to this house today. Look at this. There's a lineup outside to get into the house just to walk through it. So our technology would help in those respects, that could give it more access. But given the fact that our technology allows more access, you got to really realize that more access, the more users, the bigger the payout for you. And that's what I don't understand, that the agents are using their traditional methods. They're still getting over asking, but they could get a lot more and a lot sooner. However, the question was, where do I see the market? There is definitely going to be an adjustment coming, because I've had customers that have paid $300,000 cash. I don't even know where these customers are getting. Do they have a stash of money under their mattress? I really don't know. But they're coming with cash and no conditions. So I think these are savvy buyers that have that kind of liquid assets at their disposal. If they can walk through the home and the house has good bones. And what I mean by good bones is that the structural components of the house, the foundations, no cracks, no leaks, the major issues that cause a house to fail. I mean, we're talking about houses here, right? A real estate in the commercial aspects has also different issues, right? Has there been mold issues? Have there been is it in the ideal location for your retail shop? Has the market shifted? Have people moved from this area? So there's a lot of things to consider. But if we're just looking at the housing market, the single family homes, I honestly, I don't know where they're coming with cash, but I've heard that they're mortgaging their other homes, and they're taking the equity out of their, let's just say, their family home that their family bought their home at $180,000 in 1978, or let's call it 1980, kind of with maybe your audience is a little younger. In 1980, as they bought their house for 200,000. So as the economy has shifted and changed, their value of their house on Zillow or Trillia or Redfin has now indicated that their house, given the area, the Compton area, the sales over the last 42 years, we're at 420,000 comfortable, right? So they've doubled their money on their single family home. And maybe, just maybe, they haven't done a single lick of renovations. Like it's still stuck in 1980. And they can sell the house for 500,000 because of the shortage. And somebody is coming, they're taking the equity of that house, the value of 500, taking that 500 cash that they got, and they're going to buying two houses at $250,000 value. So now they own three homes. One they live in, and then two that they have as assets. And let's just say there's another shortage, they can take that same house at 250 and sell it for 3 and make 50 grand on each house. But where does that stop? You still have to pay that $500,000 back. And you're seeing more and more of individuals sporting. I say this maybe, in a way of sporting, new clothes, watches, and jewelry, and acting like, the industry has given them a great power of wealth, but at the same time, they need to pay that wealth back. So we had an example in 2008 and 2009 where that bubble crashed, construction projects set and lay as they were, no more ceilings, no more tiles, no more walls. They sat as they sat, unfinished. Wherever that last hammer hit and then the economy crashed, that house, everything on it, the land, all the extra material left behind. It had no value. So
It's something to be cautious, about. But just like you said, I think the government has taken steps to make sure that the money they lend out to people, like they're not as like weak as they were back in '08 and '09. So hopefully there's not going to be something major with the current housing market, but at least maybe a correction in prices. I think that's necessary to get like a new cycle in the housing market because um, at least from the market data so far, it's slowed down a bit since 2021. Feb and March have been kind of slow compared to 2020 in terms of house sales. But we'll see. That's another interesting question. It's the same thing as like the stock market bubble. A lot of people got money. Everyone has been going away from cash because cash is losing value with all the money that's being printed by the government. So they see assets as being the best return to their cash, either through the real estate market or through the stock market. And that's what's driving a lot of the money flow into these two markets. I think